So dear students, welcome to our company accounts part 6. In the previous part 5, we were discussing about the calls in arrears. So now we got the different one. It is calls in advance. So calls in advance means sometimes the shareholders pay a part or the whole amount of their calls not yet made when they're making the payments before we make it due. When the shareholders make the payment before when the company make is due is called advance. The amounts received from the shareholders is known as calls in advance. The amount received in advance is a liability of the company and should be credited to an account called calls in advance account. So there will be a new account called calls in advance account. The account received will be adjusted towards the payment of calls as and when they becomes due. For example, a company issuing shares, issuing 1,000 shares or 100 shares, a company issuing 100 shares at the rate of rupees 10, out of which 10, 3 rupees is payable in the form of allotment, and 4 rupees in the form of 3 rupees in the form of application, 4 rupees in the form of allotment, and the remaining 3 in the form of first call. So the company issued the shares, they got application money rupees 3 rupees, and then next company made the allotment money due, a share allotment account adjusted to share capital. So the amount will be 400, 4 into 100. At the time of receiving allotment money, one shareholder is holding 40 shares. One shareholder is holding 40 shares, paid the allotment money, and also he paid call money along with this allotment money. Actually, the company made the allotment money due. At that time, one shareholder who is holding 40 shares paid the call money also. Actually, the company didn't make this call money due, but he paid this entire amount along with the allotment money. So at the time of allotment, when we receive, actually bank account HR, bank, oh, sorry for this kind of handwriting, I don't have any other option here. Bank account HR, how much we'll receive? 100 into 4, 4,000 plus 40 into 3, 40 into 3, 120. So total they will receive 520. Got it? Bank account HR 520 to share allotment. To share allotment towards share allotment, how much? Actually, toward the share allotment, the company has to get 4 into 100 rupees. Oh, sorry for this. Let me erase it. 4,000 rupees as allotment. Just too difficult to write here with using mouse. And remaining 120 is what? This is the advance. This is the advance money received. This advance money, one shareholders who is holding 40,000, he paid his balance in full. Actually, he paid his final call. Actually, the final call or the first call is not due, but he paid it in advancely. So there will be another account called calls in advance account, and this amount will be credited to the calls in advance account. So this is how we'll deal with the calls in advance. I hope all of you got understood this concept of calls in advance. Then the following journal entry is recorded for the amount of calls received in advance. Bank account to calls in advance. Actual amount received and calls in advance. On the due date of the calls, the amount of calls in advance is adjusted by the following entry. So when they in the previous example that shareholders paid 120 of his call money advancely. So when the allowed call money becomes due, this we won't get that call money. So at that time there is that 120 balance is there in that calls in advance account. So that calls in advance account will be debited, and the call money account, or the which one was paid in advance, that account will be credited here. So in as per the previous example, calls in advance account ledger 120 to share first call account 120. Here is the case when the calls in advance becomes due. So this is the case of calls in advance. And the next, interest in calls in arrears. Previous part 5 we were discussed about the calls in arrears. So calls in arrears refers to the situation when non-shareholders fail to make any dues. So the articles of association of a company may empower the directors to charge interest as stipulated rate on calls in arrears. So the calls in arrears is the non-payment of uh, the allotment money or call money or any other dues toward these shares. So when if any shareholders made this kind of arrears, the company can charge interest. So sometimes the company will explain this interest rate, the charge of interest rate regarding this interest rate in the articles of association. For if the articles of association is silent or nothing is mentioned regarding this interest in calls in arrears, that they can charge maximum 5% interest on calls in arrears if nothing is mentioned in articles of association. So when the shareholders make the payment of calls in arrears together with the interest, the entry will be as follows: bank account debtor to calls in arrears. Actually, this calls in arrears will be credited here, right? And along with interest also will get credited, because when the calls in arrears, when the shareholders repay their calls in arrears, will credit the calls in arrear account. Along with, they will pay the interest. This interest is kind of income for this company, so all income will be credited, right? So bank account attached to calls in arrears amount they are paid, and interest account, interest on calls in arrears. So this is the case of calls in arrears. So calls in arrears is a kind of income for this company. The next, calls in advance. Calls in advance is just opposite of calls in arrears. As calls in advance is a liability of the company, it is under obligation, if provided by articles, to pay interest on such amount from the date of its receipt at the date when the appropriate call is due for payment. So calls in advance is the situation when the shareholders pays is amount advancedly before the company makes due. In the last example, we have seen that one shareholders paid 120 rupees advancedly. Actually, he paid his 120 rupees of call money along with the allotment money. So at that time, the company will get this payment so early. At that time, the company is liable to pay some sort of interest to the shareholder, because they are making their payments early, because we can get that amount early. So at that time, we have to pay interest. So the company can mention these things in their articles, and the percentage of interest, if they haven't mentioned, this rate of interest should not exceed 6%. So you have to consider that interest on calls in arrears is an expense for the company, because this interest on calls in arrears is paid to the shareholder. The company paid to the shareholder, but interest on calls in arrear was an income for this company. This calls in arrears interest is paid by shareholders to the company, and interest on calls in advance is an expense for this company, because it is paid by company to the shareholders. So the journal entry is here: for payment of interest, interest on calls in advance account debtor to bank. Here is the what we say, there is a journal entry for the payment of interest on calls in advance. Interest on calls in advance account debtor to bank. So see, here we got a problem. PQ Limited registered with an authorized equity capital of rupees 2 lakh divided into 2000 shares of rupees 100 each, and they issued for subscription of rupees 1000. So in this, we need to identify which one is the authorized capital and which one is the issued capital. Here, the authorized capital is rupees 2 lakh, which means 2000 shares into rupees 100. But in our problem, we won't consider this authorized capital. We have to deal with the issued capital. So here, the issued capital is 1000 shares. They issued for subscription 1000 shares. So 1000 shares into 100, 1 lakh will be the issued capital. And apart from these 1000 shares, shareholders has to pay in the form of application rupees 25, allotment rupees 30, first call rupees 20, final call rupees 25. So this is the form on which shareholders have to make the payment toward these shares. And application money on 1000 shares was duly received and allotment was made. The allotment amount was received in full, but when the first call was made on shareholder failed to pay the amount on 100 shares held by him, and another shareholder with 50 shares paid the entire amount on his shares. So here are some circumstances. The allotment was received in full. They got the full allotment money, but when the first call was made, one shareholder failed to pay the amount on 100 shares. So there is a call in arrear 100 shares on first call, right? Yes, 100 shareholders who failed to pay for first call money on 100 shares. So first call money is here 20 into 100. How much will be? 2000 will be the calls in arrear. Along with that, another shareholder with 50 shares is holding 50 shares paid the entire amount on his shares. Actually, the company is called only first call, but along with this first call, he paid the entire money, the balance 25 also. So the final call also. So here is a calls in advance. But so give the necessary journal entries in the books of the company to record these transactions. So here is our journal. I'm going to record this transaction. So let's start our journal entry. Here, first application money on 1000 shares were duly received. So first of all, they will be receiving the application money on 1000 shares. So journal will be bank account debtor to share application. How much amount? 1000 shares into how much? On application, shareholders had to pay rupees 25. So 1000 shares into 25, 25,000. So the first journal entry is over. Then the next, we have to transfer this application money into share capital account. So the entry will be share application account debtor to share capital amount 25,000, same 25,000. So now we have transferred this share application money to the share capital account. So the next, the allotment amount was received in full, but when the first call was made to leave it. So next is our allotment. We have to make the allotment due. So how can we make the allotment due? Share allotment account debtor to share capital. How much the amount on allotment? You have to pay rupees 30. So 30 into 1000. say 20,000, 30,000. So we made the allotment due. You have to write the narrations, but for the quick solving, I am not writing the narrations. Then we will receive the allotment money. The allotment was received in full. Okay, so bank account letter share allotment account amount rupees 30,000. Till now there is no problem. They got the allotment amount in full. The next call, the amount of allotment was received in full, but when the first call was made, so they are making the first call. So we have to make the first call. Share first call account letter share capital account. How much? On 20 rupees on first call. So 20 into 1000, 20,000. So first call was made due. Then here one shareholder failed to pay amount on 100 shares held by him. So when the first call was made, one shareholder failed to pay the amount on 100 shares held by him. So he didn't pay his first call money on his 100 shares. So there is a collision error. How much will be the collision error? See, and he didn't pay his amount on 100 shares. So 100 into 20 rupees on allotment. So the amount will be 2000. We won't get rupees 2000. 2000 will be the collision area. 2000 is the collision area. So how did we find out this collision area? One shareholder who is holding rupees 100 shares did not pay the first call. So the first call is 20. 20 into 100. 2000 rupees he didn't pay. That's the first case. And another shareholders with 50 shares pay the entire amount on shares on first call itself. So there is one shareholder who paid his entire amount along with the first call. So the first call, there is another balance of rupees 25. They didn't made it call, but one shareholder paid the entire amount, which means he might have paid rupees 25 of his final call with this first call. Actually, the final call is payable only when the company makes due, but one shareholder is holding 50 shares paid his entire amount with the first call. So, along with this share first call, we have to get 20,000, but out of which we won't get rupees 2,000 in the form of arrear, and there is a calls in advance. Calls in advance how much? One shareholder who is holding 50 shares paid his entire amount, which means he paid his balance also. Balance is final call rupees 25. 25 into 50. 1,250. So we'll get 1,250 in advance and we won't get this 2,000 as ordinariness. So what will be our journal entry for this? So journal entry will be, first we will get the cash. Bank account letter. How much we will get in the form of first call? Actually we have to get 20,000. But out of it one shareholder is failed to pay rupees 2,000. So we'll get only how much? Actually we have to get 20,000. Out of which one shareholder failed to pay rupees 2,000, right? But another one shareholder who paid his final calls also along with the first call. So the calls in advance is 1,250. 1,000. So in total we will get 19,250. Actually, we have to get rupees 20,000 on first call, but one shareholder who is holding 100 shares didn't pay the first call. So 2,000 we won't get in the form of value. And one shareholder who paid his final call money along with the first call. So we'll get 1,250 in advance. So there is a calls in arrears. So we have to include the debit the calls in arrears account. Calls in arrears account. How much? 2,000 and credit to share capital account. How much we'll move to share capital account? Actually 20,000. Sorry, not share capital account. Share first call. 20,000 towards share first call and the remaining 1,250 were to calls in advance. 1,250. So here is the case. Bank account debtor, calls in arrears account debtor to share first call to calls in advance. So this is how we can solve this problem. Bank account debtor, calls in arrears account debtor to first call to calls in advance. Bank account debtor, actually we got 19,250 and there was a calls in arrear, so it should be debited calls in arrears account debtor. And to share first call, actually there is a we have to get 20,000 in the form of share first call, so we'll credit the same amount here, and there is an excess of 1,250 in the form of calls in advance. And the next case, we have to make the final call money too. So share final call account data to share capital account. How much? 1,000 into 25,000. When we receive amount, bank account debtor, how much we'll receive? Can we get the entire 25,000? No, because one shareholder who is having 50 shares paid his entire amount along with the first call. So there was a calls in advance. So here now we won't get 25,000 because we already got this 1,250 advance. So we have to minus 1,250. So now we will get only 23,750. And there is a calls in advance 1,250. Now we will check this balance. There is an account credit balance in this account calls in advance. Now we will take this account balance and transfer this account balance to the share final call. So calls in advance account debtor 1,250 to work share final call. Total 25,000. Here is the problem. Now we have completed all the workings. So this is how we have to deal with this calls in arrears and calls in advance in this problem. Both are the calls in arrears and calls in advance. Just open your books and find out the similar problems just work on the problem. If you have any queries, just contact me in WhatsApp or Google Classroom.